Guys, welcome to Send Trading. This is Emmanuel Victor, and today I came up with an awesome video for you, a total setup on smart money concept, which I used to catch a 1 to 7 risk to reward ratio. I caught this move a 1 to 7.98, I guess, or something like that, risk to reward ratio. Total setup was on smart money concept, the demand and supply zone, marking up my areas of liquidity, drawing out my other blocks, right? And that's just what I'll show you in this video. I'll show you from beginning to end my reasons for entries and why I entered the trade, and my total setup on this particular chart. And if I move forward a little, you also see I got another move. If I move forward a little, you can see that I got another move also. So I'll be showing you exactly why I entered my trade and the reasons I entered my trade. And hey, please, if you really want to trade with smart money concept, maybe you started falling in love with the whole of the concept, everything about other blocks, liquidity, areas of liquidity, chalk and all of that, and you really want to learn all this from scratch, you really want to learn all this from a simpler explanation, I will recommend you consider subscribing to this channel, because on this channel I try my possible best to explain very well so that the least person can be able to understand. So if you are on this video for the first time, if you are seeing my video for the first time, welcome, and I'll ask you to consider subscribing. You subscribe, you turn on the notification bell, so when I drop awesome content like this, when I drop awesome videos like this, you also be able to learn and watch. You also watch and learn and know the concept, know the reasons why I enter. So when you're marking up your own trade, you'll be able to put this into consideration. So if you're a returning subscriber, I would like you to like this video, share it to your friends, those that will need to watch it. So please, everyone, if you are here for the first time, subscribe, and if you really like this content, please like the video and share. Thanks as you watch it. So this video, this is AUDJPY. I took this chart, I took this trade. Let me take this back. First of all, let me show you the proof that this was a 1 to 7.98 risk to reward ratio I got there. So you can see that 1 to 7.98. You can see that 1 to 7.98 risk to reward. That was what I caught on this trade. 1 to 7.98 risk to reward. So let's go back in time for the chart. I went back. First of all, when I open my trading view, I open this particular pair. First thing I always do is to know the structure of the market. Of the market, and at this current price, at this current time, the whole of this setup, we can see that the market is on a downtrend. The market was on a downtrend because it broke structure for this. It broke structure here, so making the uptrend come to an end. You understand what I'm trying to say? The break of structure at this point here marks the end of an uptrend. So at this point, we'll try to look for where to sell, a zone to sell. So after I've been able to understand the structure of the market to be a downtrend, what did I do? I was able to mark out my areas of liquidity, my zones of liquidity. You can see them all marked out here. You can see them. This is a trend line liquidity. This is an equal low liquidity. So I was able to mark out all my areas of liquidity, that I'll put them into consideration. Why do we put areas of liquidity into consideration? We put them into consideration because liquidity is what moves the market. Liquidity gives the market power to move in opposite direction. Once it has grabbed the liquidity, grab all money in that zone of liquidity, then it has the power to move. That's what fuels the market. So I have to mark out all my areas of liquidity so that I'll take note of them. On the retail market, they will call this place now. What you hear is they'll say this is support area. They would call this a trend line. Trend is your friend and all of that. But here on the smart money concept, we trade demand and supply. We trade areas of liquidity. We take note of them so that to be careful on charts and kind of trades we take. So here, after I've marked out my areas of liquidity, I saw this as this place which is an equal low. I mark this as an equal low, so which is which you know as in the smart money concept that equal lows are areas, are zones of liquidity, So at that point, market was just here and has formed this zone which is equal low. So what did I do? All I did was look for the right order block so that I will take my entry. That was when I drew this. That was when I drew this order block here. And I waited for price to touch the order block. Waited for price to get to my point of interest, which is the order block. Now I waited. What again? I waited for break of structure here. If you look at price on this order block here. So if we look at price on this order block here, we can see that there was a break of structure here. There was a break of structure to the downside. So immediately we had that break of structure on a lower time frame, taking a lower time frame of 1 minute or 5 minutes, we will see a break of structure inside that order block, which made me entered my trade. Or probably if you were the one, you could have, maybe you're kind of person that does not have time, maybe your work does not give you time, you would have set a sell limit at that point, so that once price get there, it will activate your trade, it will trigger your trade. So at that point, we entered the trade, hoping to do what? When we entered that, what were we hoping for? What was our aim in this trade? I was hoping to grab out all of the liquidities in the market here. That was my mission, that was my aim, that was my objective for entering the trade. That was my reason. That was why my take profit came down to this side, because I wanted to grab all the liquidity, all the liquidity on this place, this liquidity of equal low. I wanted to grab it, and I also wanted to grab the liquidity of this the liquidity of this trend line. That is the trend line liquidity. I wanted to grab this also, trend line liquidity, which I showed you at the initial time. Look at it. I wanted to grab the whole of the liquidity here and the whole of the liquidity here, for market to have the strength to move to the direction it wants to. So that was how I caught this trade, a 1 to 7.98 risk to reward. What was my reason? One was I marked out my areas of liquidity. I saw that the market has been cut off from an uptrend after the break of structure here. If you can remember, after the break of structure here, I discovered that market has stopped its uptrend and now on a downtrend in the 15-minute time frame precisely. So I was looking for sells. So after I marked out my zones of liquidity, I decided my market structure. I drew my order blocks. and that was just that. Those were the three confluences I looked at in taking this trade. Now for the next trade beside it, during the play out of the previous trade, which is this, one, what do we find out? We found out that chalk formed. What is chalk? Chalk is change of character. So there was a formation of chalk here, which made me created another entry setup. Formation of chalk. If you've not watched the video on chalk, watch my previous video, recent video I posted before this, that will explain chalk for you. So chalk, formation of chalk here. I waited for price to retest at this zone, at the zone of chalk here, at that zone, and I did I took a sell for market to grab this liquidity, this trend line liquidity out, and boom, that was my take profit. This particular trade gave me, I guess, 1.49 risk to reward ratio, approximately 1.5 risk to reward. So that was my whole setup on these two trades and my reason for entering them. Now I've got this for the week. For those of us that will be taking trades for this week, You can put this into consideration also. Put this into consideration. This is the formation of Quasimodo. You can see that Quasimodo entries. Got Quasimodo entries here. That this is my setup for the week. I'm waiting for what am I waiting for? I'm waiting for price to get to this point. I'll see how it reacts. If it doesn't react well, then it gets to the other block. I see how it reacts, a break of structure, then to the downside. Market to break structure to the downside. When it gets to that demand, when it gets to my other block, which is which confirms our setup for Quasimodo. So that's just what I'm looking at for the week, and I know this, hopefully this could give us from this point this could give us about 60 to 70 pips. 60 to 70 pips. That's a decent trade for a start of the week. So let's put this trade into consideration and watch out how it plays out. I'll update this later. So please, if you like this video and like the whole of what I do here, please like this video. And if you are here for the first time, subscribe to this channel. I'll be explaining. I try my possible best to explain to the least that which you can understand. So subscribe to this video, subscribe to this channel so that you get notifications when I drop also content like this. Thanks for watching this video. Have a great day. Have a great trading week. Thanks. Bye. See you in the next video.